Scan. Okay. I was really testing this out to see if I'm able to share my screen, but it doesn't look like I'm able to share my screen here. Hmm. Dang. I wanted to share my screen because I wanted to learn a little bit about what's going on with all of this Silicon Valley stuff and use ChatGPT to help me out with understanding it. I'm sorry, I have my Invisaligns in, so I might sound a little bit like I have, I don't know, something in my mouth because I do. That's what she said. Anyway, so I was actually listening to the Anton Daniels Millionaire Morning Show earlier today, and he was the one who was talking about all of what was happening with Silicon Valley Bank, and he gave a lot of insight. So I encourage anybody who wants to kind of hear more about it through someone's eyes who is much more versed in this financial world than I am, check out Anton Daniels' Millionaire Morning page. But um, I got a prompt on my phone and I was just like, I wonder what ChatGPT can tell me about this, just so I can understand this. There's so much conversation happening right now about Sierra and Russell Wilson and what she wore and all that. And I'm like, whatever. What's going on with all this banking stuff, right? So I went into ChatGPT, which I call my ChatGPT Enrique. Yes, I named mine Enrique. And FYI, I am operating off of, I don't know if you can see this, but they just launched Chat GP4, which is like a new version that they're testing out. If you have the premium package, which I do, is $20 a month, then whatever they roll out first, you get to find out about it, play around with it, what have you. So I'm kind of going back and forth between ChatGPT 4 and ChatGPT 3. I don't know a difference right now, but hey. So here's how it really started. This all honesty, okay? So I'm scrolling through Facebook, and again, this is after I got off watching Anton's show, and I'm just like noticing how many people are commenting about Sierra and Russell and some other stuff, and Angela Bassett not getting her award and all this stuff. And I look, whatever is on your mind, that's on you. And I was just like, I don't really see anybody in my timeline talking about this. So I started to type, I want to ask, um, is anyone else watching and learning about all that's happening with Silicon Valley Bank? And I stopped because I was like, is that the right way to ask the question? Because I really don't know how to ask the question because I'm still learning about it. So I went into Chat GPT and I basically said, like, I want to pose this question on Facebook. I put the question in, and he said, like, he gave me a question to pose. Has anyone been closely following the latest developments with Silicon Valley Bank? I find their recent moves quite intriguing and would love to learn more. And then I was like, okay, wait, he doesn't know what's going on because ChatGPT, the last that I checked, their information kind of um, is not complete past 2021, I believe. So the data from 2021 till now, it's not so much like you can't really get current news to my knowledge. So I said, okay, well, let me bring in some information to ChatGPT from these articles that I'm reading. And then I was like, well, if I do that, I might as well just come on and do a live. So I was trying to go live through this app called Switcher, but it didn't work. I couldn't share my screen. And then I thought that maybe YouTube would let me share my screen, but it's not. So we're going to have to go with my phone. So I'm not going to spend too much time because I'm supposed to be doing something else right now. But I just wanted to see, like what um, ChatGPT has to say about what's going on. So I went to a I went to an article from the Wall Street Journal, and it was entitled Silicon Valley Bank Creditors Form Group in Advance of Possible Bankruptcy. Centerbridge Partners, Davidson Kempner, and PIMCO among investors that have hired PJT Partners in anticipation of possible bankruptcy. But you know what I want to do? I want to find out what's going on, like what happened first. So I'm just going to go into my phone and type in Silicon Valley Bank latest. I'm going to go, I'm going to go to, now this says what made Silicon Valley Bank collapse. Okay, so I'm going to copy this whole article cuz I'm not going to read this whole article. Not cuz I don't like reading, but because I know that I'm not going to understand the whole thing because of what it's talking about. So I'm copying the entire article and I'm going to go back to ChatGPT and I'm going to say, um, can you break this article down to me at a fifth grade level with five main points? And so I'm going to paste that in. I'm pasting all the stuff that's in the article. Like I just hit select all and I'm hitting enter and it's typing. Can you see that? Forgive me, guys. I'm normally not on my iPad, so I'm still learning where the camera is. It's not so obvious. Okay, it's still going. Okay, so we have one Silicon Valley Bank, which specialized in helping tech startups, collapsed after a bank run, meaning many customers withdrew their money at once due to fears about the bank's stability. Two, the U.S. government stepped in to protect customer deposits, but the bank's collapse still affects tech companies and startups. Three, one reason for the collapse was a lack of diversification in the bank's investments, as they put too much money into long term U.S. treasuries and mortgage backed securities, which lost value when interest rates increased. I'm going to ask him to explain, to go deeper on point number three. um, for the bank's collapse is a big problem for the tech sector, as Silicon Valley Bank provided financing for about half of all U.S. venture backed technology and healthcare companies. And number five, the collapse could make it harder for tech startups to get funding in the future, as other banks may be scared to take the risk of investing in them. So I'm going to say, can you elaborate on points three and four? Remember to break it down at a fifth grade level. I'm just saying fifth grade to basically saying keep it simple at a fifth grade level. Okay, let's see what we got. Okay, so for point three, Silicon Valley Bank invested a lot of its money in things like US government bonds and loans for houses. Okay. These investments are usually safe, but their value can go down if the cost of borrowing money, interest rates, goes up. When the government raised interest rates, the value of the bank's investments went down and they had a hard time getting enough money to give back to their customers. Wait a minute. But okay, hold on. I got a question. Okay, number four. The bank was really important for technology companies because it helped them get money from investors to start and grow their businesses. About half of all new technology and healthcare companies in the US got help from this bank. Now that the bank has collapsed, it might be more difficult. Okay, I didn't need that one. Okay. So for number 3, what I want to know is if the government, okay, so I'm going to just ask this. So if the government was the one who raised the interest rates, which therefore impacted Silicon Valley Bank's investments, then why is the same government the one who is trying to put stuff in play so that they still stay afloat? Question mark. Does that make sense? Y'all get what I'm saying? Oh, let me turn my mic off. Okay, let's see. And with ChatGPT, even if you know how sometimes, remember back in the day, you'd be like, I don't want to ask a dumb question, even though I was the kid who was like, a question is a question. Um, but even if you think the question is not the best, try it out anyway. Okay, so I hit enter. Let's see what he says. Okay. The government's main job is to keep the country's economy stable and protect people's well being. Yeah. When they raised interest rates, they were trying to control inflation when prices for things go up too fast. This decision affected many businesses, including Silicon Valley Bank. When Silicon Valley Bank started having problems, the government stepped in to help protect the bank's customers. They didn't want people to lose their money or for the problem to spread to other banks and businesses. By helping Silicon Valley Bank's customers, the government is trying to prevent bigger problems in the economy and make sure that people and companies can continue doing their work without too much trouble. Like, this is the part that I don't understand, and maybe I heard Anton saying that he would start doing some panels, some money conversations and things like that. And I'm not gonna keep going with Chat GPT right now because I have to get off soon. Um, but that's one of the things that I don't understand is it's kind of like between the government and the reserve, the Federal Reserve, they just kind of like just it's just them going back and forth with each other. And one or both of them make a move that like makes things go down, and then you make a move to make things go up and then go down. Like, I'm learning more and more about all of this stuff. Like, I just learned during COVID that the banks did take your money, and not only do they take your money and go and invest it, but they take the money that they get and they go and buy life insurance policies and things of that nature. So I already knew that once you put your money into the bank itself, the money is not just staying there. Um, but I didn't know no that they could take the money, go invest it, and if they catch a L, like there's no covering for it. I you know what I'm saying? I guess I would think that if a bank has $1 trillion, okay, let's go lower. If a bank has $50 billion Is that too high for a bank? I don't know. If a bank has $50 billion, um, and they invest 25 billion of it, then shouldn't they always have a reserve of 25 billion to cover that investment of 25 billion so that let me ask I'm gonna ask Enrique this last question. So I'm gonna say, Enrique, considering the fact that banks use their customers' money to invest in other instruments, then is there any rule or law that states that a bank must be able to at least cover the initial amount of their investment? Question mark. All right, let's see. This is my last question, guys. Forgive me if you know this. I don't. So I'm finding it out. There's no reason for anybody to be in the dark anymore. And if you scared to ask a human, ask Enrique. ChatGPT. I'm not afraid. So, all right, I'm gonna read this and then I'm gonna go ahead and sign off. Okay, let's see what he says. Doo-doo. Banks are regulated by various laws and rules to ensure that they operate safely and responsibly. One of these regulations is maintaining a certain level of capital, money that the bank has set aside to protect against potential losses from their investments or loans. This is called capital adequacy. Excuse me, I'm sorry, guys. I feel like I'm like breathing in the mic. I'm sorry. Capital adequacy requirements make sure, wait, capital adequacy requirements make sure that banks have enough money to cover a portion of their investments or loans if something goes wrong. Okay, let me just reread it for the people in the back. That would be me right now. Capital adequacy requirements make sure that banks have enough money to cover a portion of their investments or loans if something goes wrong. Why a portion though? Why a portion? I mean, wait a minute. Shouldn't you get people's permission? Like, okay, let me read the rest. To cover a portion of their investments or loans if something goes wrong, like if people can't pay back their loans or if the value of the investments goes down. These requirements vary depending on the country and the specific regulations in place, but the goal is to ensure that banks can continue to operate even when they face financial challenges. However, it's important to note that these requirements don't guarantee that a bank will always be able to cover the full initial amount of their investments. The goal is to make sure that banks are not taking on too much risk and that they have a financial cushion to help them through difficult times. Wait a minute though, but that's not their money. Like, what do you mean a portion? That would then mean that don't they need our permission? So is it that when you go and you open up a bank account in the fine print, you're it must say somewhere in the fine print that they are allowed to invest your money and only be responsible for returning a portion of it. And that's even if your portion is included in the portion that they have to cover, right? So let me ask this question real quick. I know I said I was gonna stop, but let's watch this. Okay. So, do the banks have to get customers' permission to invest their money? Question mark. Let's see. Okay. Uh-oh, Enrique writing a lot. What you writing, Enrique? Okay, hold on. Okay, y'all ready? When you deposit money in a bank, now this is what ChatGPT is saying. So technically speaking, I need to go like look at other information and sources. But for all intents and purposes, I'm gonna go with this. If y'all hear this and it's the wrong thing, please educate and enlighten me, right? So when you deposit money in a bank, you're essentially giving the bank permission to use your funds for various purposes, including making loans and investments. What do you mean I'm essentially? Where though? Where am I giving them legal permission? Is it just, is that the understand? Where is it? It's got to be written somewhere that when you deposit money in a bank, that's what that means, though, right? When you deposit money in a bank, you're essentially giving the bank permission to use your funds for various purposes, including making loans and investments. Banks use their customers' deposits to generate income through lending and investing, which allows them to pay interest on savings accounts, provide services, and cover their operational costs. So, hmm. However, I'm sorry, this is percolating. However, banks don't usually ask for specific permission from each customer before investing their money. When you open an account with the bank, you agree to the terms and conditions of that account, which typically include a general authorization for the bank to use your funds for its business activities. It's important to note that banks are regulated by various laws and agencies to ensure that they operate responsibly and manage the risks associated with lending and investing. Additionally, in many countries, deposit insurance programs protect customers' deposits to a certain limit, even if the bank faces financial difficulties or fails. So I'm going to ask, um, hmm, can you give me an example of what those exact terms and conditions might be? Like, how is it worded for um, Silicon Valley Bank? Let's see. I don't have the exact terms. Okay, he's giving me some general. Now, listen, I am guilty of not reading fine print. I am also guilty of reading fine print, and I'm doing my best to push myself to read all fine print. Haven't gotten there yet, but I'm pushing myself to do that more so with things that you would just normally just sign off on. Bank accounts would be one of them that I will uh look at more clearly. Okay, so he says, I don't have access to that. I mean, I don't have access to the exact terms and conditions for Silicon Valley bank accounts, but I can provide you with a general statement of how these clauses might be worded in a typical bank's account agreement. Okay. So this says, by opening and maintaining an account with us, you agree that we may use the funds deposited into your account to engage in our customary banking activities, including but not limited to making loans to other customers, investing in securities, and participating in other financial transactions. These activities are conducted in accordance with applicable laws and regulations. Okay. which allows us to provide services, pay interest on deposits, and cover operational expenses. By using our banking services, you acknowledge and accept the risks. Excuse me. Um, Sorry. I can't stand this. Okay. By using our banking services, you acknowledge and accept the risks associated with our lending and investment activities, as well as the potential impact on your account balance and the availability of your funds. I know for sure that people are not reading that, or you're reading it and you're like, well, I'm not going to have more than $250,000 in there anyway, so I know I'm covered by the FDIC. In fact, I think that that's how I probably wrote a lot of stuff off with banking is like, I have less than 250,000 in my account, and that may be true right now because my bank account didn't catch up to my millionaire statuses yet, but um all in this this concept of banking has really tripping me out over the last few years. Please note that this is a generic example and the actual wording in a bank's terms and conditions may vary. It's always a good idea to carefully review the account agreement when you open up a bank, blah, blah, blah. So I'm not going to ask any more questions, but considering what was just shared, and again, considering what I've learned about banks investing in other instruments such as did learn that life insurance policies, you can become your own bank. And I was at it until I'm reading this stuff now. Because essentially, what a bank is doing is like, hey, everybody come over here, give us your money, we'll hold it. Like, we will just physically take it from you and keep it safe, right? And you're trusting our, relationships, our intellect, our connections, our business savvy, our, money management skills, our financial acumen, our all of that. Like you're trusting all of that and we're going to take it. And not only are we going to take your money and go use it to give to other people, we're going to take it to invest in things. And the money we make, you're not even going to get like a significant return off of it. We're going to give you a few pennies because you're probably just putting your money in your checking account. You know what I mean? So we give you a little bit for just giving us the money. And then that's what it is. So what's the difference between me doing that? Okay, so if the bank, because without the bank taking your money and investing it to make money, it can't cover its operating costs, which means it can't have bankers, tellers, can't have any of that. So really, we're paying them to go to take our money to make them money, right? So if that's the case and that's been working for so long, then why can't we look at what the banks invest in and we invest in that? Like instead of me giving you, I mean, I know it's at a larger scale, it's at a larger scale because they will collectively have more money than you, but I'm just saying in general, you know why couldn't a person, instead of putting their money into the bank for the bank to go invest it for themselves, can't we look at like the bank's financial uh sheets and see what they're investing in, and then we just take our money and then just go invest directly into those instruments? Is that a question to ponder for another show? I think so. Let me tell ChatGPT to remember this. Let me tell Enrique to remember this. Enrique, can you remember this for another YouTube live show? The question is, why can't we take our own money and find out where the bank invests their money and just invest our money there directly? Question mark. Okay, so I have my question and I'll do another show to he's answering, but I'm not gonna read it. I'm not gonna read it because I got stuff to do. So I'll come back. Um, what's today? Tuesday? Okay, so I'll be back Thursday or next Tuesday. I don't know. I don't know how often I'm gonna do this, but I'm gonna do it at least by next Tuesday, if not before. I will be back and we're gonna find out, well, can't we just take our money and find out where they're investing their money and put our money there too? Let's see, y'all. So, if you have stayed with me this long, I appreciate you. I hope that you have benefited in some way, shape, or form, whether it's learning something about the little bit that I read about what happened with Silicon Valley Bank, or just financial world in general, chat GPT, how fun it can be, how informative and helpful it can be, something with this banking industry, and something that might be able to help us all out. So if you enjoyed the video, do me a favor and just hit the like button. It costs you nothing, just a little bit of energy to hit the like button. And if you want to stay tuned with me and see what we talk, see when what we find out next with this banking stuff, then go ahead and subscribe to my channel. And as usual, I hope that you have a wonderful, healthy, fantastic, phenomenal, awesome, peaceful, harmonious day, night, evening, morning, afternoon, what have you. Thank you again for tuning in to Too Busy Living to Name This podcast. I'm Carrie Spencer, and it has been quite a pleasure. Have a great one, guys. Bye.